Wow, we're talking about something super important for your dental practice, and that is raising capital. Capital is the lifeblood of your business, of expansion, of growth. And by the time we finish today, you're going to know about some of the different loan options that are available, and you're going to have some options on how to raise capital for your practice. You're going to have a real high level overview of the different options that are out there, and you're going to feel informed the next time you're looking to raise some capital for your dental practice. And so excited to have Joshua Kim here today from 7A Accelerator, which helps dentists raise capital using the different small business association programs that are out there, and also a capital advisor who can help in the M&A space. So excited to have you here, Josh.
Hey, great to be here. Great to be here, Tim.
So, let's talk about lending. Let's talk about loans, right? Capital is absolutely the lifeblood of a business. So how did you get started doing this?
Yeah, so thanks for asking me. I've got an interesting backstory. I actually was able to purchase my first business at 19 years old with an SBA loan. And going through that process, I definitely learned a lot. I learned that not all banks are alike. There's a lot of challenges in finding the right lenders to finance SBA projects. And, it was through a lot of my experience with that, and then, running that business, helping some other business owners, that I realized that there's a big need for, really more just the education piece of it. I'd say, knowledge is 90% of the game when it comes to getting an SBA loan, just understanding the different types of loans out there, understanding what banks are looking for, understanding how to find the right lenders and, filter through them to get through the process. So I bought my first business at 19. I actually bought a total of 3 companies in a post-acute healthcare sector, not in the dental world, but I'm very familiar with a lot of the unique challenges that come from running a business in the healthcare services space. And it was through my experience with that, going through the SBA loan process multiple times, I learned a lot about it. I helped a couple of people on the side, and then more recently with COVID, I sold my businesses, and I kind of realized there was a big opportunity to help other people just understand what you can do with SBA financing, and build a whole consulting business around capital raising, deal structuring, and helping other folks accomplish financially what they want to. Then they just don't have the time to figure out or learn, right?
Okay, so you said you bought your first business when you were 19.
Correct. I got a $1.2 million bank loan to go buy a business that had about $600,000 a year in cash flow. And the reason I was able to do that was because SBA loans, they don't require any specific amount of collateral. A lot of people hear all these myths and pieces of misinformation that dictate otherwise, but it's not true. It's just not true. You don't have to have a certain amount of collateral or real estate to go get a loan. A lot of it just comes down to talking to the wrong lenders who don't really understand the loan program, what the rules are, and what you can really accomplish with it.
Wow. Okay. That's amazing. And that may blow most of our listeners' mind is here you are at 19 and you just got a $1.2 million loan. So was that surprising for you too?
Yeah, it was, but it wasn't, to some degree, because I had I'd done a lot of research on the loan program. I'd done a lot of research on how to structure it. I mean, so one thing I will definitively caveat and throw out there was I did have an operating partner. I had a minority equity operating partner who had about 12 years of experience in the industry. So when I went to the bank and was getting the financing for it, it wasn't just, hey, you've got a 19-year-old with no industry experience in the space who's getting the loan. I had an operating partner and kind of a team behind me that knew the space pretty well. And the only thing that they lacked is they just understand how to raise the money, right? They weren't deal people. They didn't understand how to go raise capital to do stuff. They were operators. So when I went to the bank, it was the duo of us that they were approving for the loan. Myself and the guy that had 12 to 15 years of operating experience in the industry already. So I will caveat that it's not as easy as, hey, your 19-year-old can go out there and go get $2 million or $3 million to buy a business. There are some other pieces that went into it, but I tell my story to people to really just exemplify, like, look, if you're a dentist and you run a practice and you're having a difficult time with getting financing on favorable terms from an SBA lender, it's probably because you're talking to the wrong banks. Because I was able to get my deal done with less than 20 grand in my name at the time. Most of the projects that dentists have are 1,000 times more straightforward and creditworthy than my situation. And so that's kind of why I like telling my story to people. Sometimes they say, oh, well, you can't do this, that, the other with an SBA loan. I say, well, I was able to accomplish this, and so I know what you can do with it. And most of other people's deals and their financing needs are a lot easier for the bank to sign off on than mine. So that's why I bring it up.
Now you started to touch on it, right? And those are some of the myths that are associated with raising capital. And right, oftentimes the new doctor coming right out of school, they're thinking, you know what, I've got all these student loans. No one's going to lend me any money to buy a practice. Or, you may see other things that pop up too. What are some common myths that you incur, that you encounter day to day that people may believe about the lending process?
Yeah, I think it comes down to a couple of things. The biggest one is probably that all banks are created equal. That's the biggest myth that I have to break for people. And I'll just give you guys a story. There's a dentist that I'm working with. He's got multiple locations already, and he was telling me a story about a couple months ago. He was trying to buy a building for one of his offices. It wasn't a crazy purchase amount. It was about $1.2 million for a piece of real estate. There's basically no risk in it for the bank to do a 7A loan for a dentist to go buy a piece of property, because in his case, the mortgage on the loan was actually going to be less than what he paid for it cash. So the mortgage was going to be less than what the lease was, right? So let me see. So that's kind of the gist of what you can do with it. And so anyway, that's obviously a very creditworthy deal. His lease was going to be, his lease was higher than what the mortgage was going to be. He had cash flow positive practices. And for him, his banks, the banks that he went to, these were all big banks, Chase, Bank of America, and I think one other big one. The issues that they were running into were that they wanted 30% down. And on an SBA loan, you do not need 30% down. And so, I'm helping him kind of navigate the process of finding a better lender. But what I've seen, especially with a lot of dentists, is conventional lenders have great options available for dentists, but when it comes to SBA, it's not a great service offering. And so while the bigger banks can help get the practice off the ground up to the first $1 million, just because they're an SBA lender doesn't mean they're going to be created equal with all the other banks. You know what I mean? And so that's kind of one of the big things. That's kind of one of the big things I break down for people is that just because your bank says they're an SBA lender or claims they're an SBA lender, it doesn't mean that they're going to be any good at it. And just to kind of give you a reference, if you actually pull up a list of the top SBA lenders in the country, Bank of America, you would think a lending institution as large as they are, where do you think they would fall in the top 100 SBA lenders? Just rough guess.
Oh, the way you asked that question, I'm going to say they're not near the top, probably.
They're not. Of course, it's kind of a loaded question because you know where I'm going with this, but they actually are not even in the top 50. They fall somewhere between like 60 and 70. I actually pulled up the list here to give you the exact reference. So as a bank as a whole, they only did $100 million of loans last year. For a bank like Bank of America, that's nothing. They did like 226 loans last year, which is it's absolutely nothing. And so that's the biggest myth I break for people is going to the big institutions is usually counterintuitive. The better lenders are going to be your regional players, the local lenders that do have a good SBA offering, or sometimes national SBA lenders who they specialize in just doing those loans. And so for anyone who's not familiar with how these loans work, you don't actually go to the SBA to get the loan like you do with the EIDL loans. They're administrated more like PPP was, where the banks are the ones actually giving out the loans. In the case of PPP, it was 100% government guaranteed. Normally with 7A loans, they're about 75% guaranteed. So for a lender to do a loan under the SBA 7A program, there's very minimal risk for them. They don't have a ton of downside, right? So that's kind of the benefit they have, but a lot of the big banks don't understand that. So that's really the biggest myth that I would.
So kind of myth number one is the fact that not all SBA lenders and not all lenders are created equal. So you may have talked to a bank, you may have been turned down, or the banker says, "Oh, there's no way that project's going to fly. You've got to give us 30% down to buy your business or the real estate you're looking to acquire." And really, you should keep looking because not all banks are created equal.
Yeah.
Okay.
Yeah.
What are some other myths that you kind of run into and that people may believe?
Yes, I think the second biggest myth is that, my business won't qualify for SBA financing. People are not really understanding. I guess in the dental world, it's not as big of an issue that I've run into, but one of the big myths a lot of times that I break for people is they don't think their industry or their business is going to be eligible. And if you go to the SBA's website around eligibility, pretty much 99% of for-profit businesses in the United States are going to be eligible. Unless you operate like a strip club, a lending institution like a hard money lender or some other business that it falls into the exemption categories. your business will be eligible. I think the other thing is it's not necessarily just about straight eligibility, but if it's a fit. A lot of people kind of have this preconceived notion that SBA financing is only for businesses that can't get financed conventionally. And so dentists, a lot of times, they go get their $1 million from Chase or, from Bank of America or whatever to get their practice up. And they're like, oh, well, I qualified for conventional financing. SBA is not for me. And so that's actually really not the case. In fact, what I've generally seen with the dental industry is the best way to grow your practice, or whatnot, is go definitely tap that $1 million of conventional financing off the bat. They oftentimes do that, no money down, they don't have any requirements. And then once you're in this position where you need more capital to grow, whether it's for a new location, buying a practice, buying a building, opening a new practice, or just scaling the existing one you have, go tap SBA financing. You can tap SBA 7A for up to $5 million, 504, which is just the real estate piece of it. You can tap it up to $10 million. And I have plenty of banks that I work with, that I connect dentists with and other business owners with, who, if they have a good business, they'll loan money on top of the SBA. I have one bank in particular, they do that all the time. So you got a dentist, he's tapped out, he's done his $5 million to the SBA. He needs $2 more million to go, acquire more practices, but his underlying business is strong. The cash flow is strong. It services the debt very well. And they'll lend him another couple $1 million to go do what he needs to. And so these are the options that are just available and just really out there. But again, like I said, one of the biggest, like I was kind of talking to you about before we jumped on the podcast here, one of the biggest issues is banks are just too busy to educate people. They are so busy taking all the inbound phone calls most of the time from business owners that are already kind of being introduced to them or know about them. They don't have time to go jump on podcasts like I do and educate folks because, they haven't figured out banks are also not very efficient. So that's the other problem that I've identified too. I've got another business that's hopefully helping with that on the software side, but banks are not very efficient at either marketing or managing, incoming inquiries. So that's kind of what we've seen. So yeah, that's the second biggest myth. I mean, other myths are, you need a ton of cash or collateral to get SBA financing. That's really not the case. I mean, my own use case is a perfect example of that. Borrowed $1.2 million. Granted, my partner did own his house and have some cash, but I mean, his positive net worth didn't exceed $150,000 when we got that deal done. So combined less than $200,000 of net worth, bought a business for $1.5 million and borrowed, $1.2 million to do it. Very, very straightforward use case in that. And I think the other big myths that kind of fall under SBA, so they're kind of tied together, is that, SBA loans require a ton of paperwork and they take a long time to process and close. The SBA has really streamlined the process for banks who participate in the program. And I know banks that, if you've got, and there's different sub loan products they have under the SBA 7A program, but there's a lot of options for, if you need to get working capital less than $350,000. I have banks that they do what is called the SBA 7A small loan program. Those can get funded in 3 weeks, from application to funding, 3 weeks. And the SBA recognized that their previous process, from 10, 15 years ago, was very arduous. There was a lot of paperwork involved, and it really just discouraged a lot of people from applying in the first place, which is completely counterintuitive. So they passed a lot of stuff to really reduce the paperwork. And now it's the average SBA loan. If you're not doing a building acquisition or practice acquisition, there are more moving pieces with acquiring another business or another building involved that can drag out a closing. But generally speaking, you should be able to get an approval, a full commitment letter and approval from a bank within about 2 to 3 weeks of submitting your loan package with them. And if you're quick, you can close in 2 weeks. But usually the reason that loans take a while to close, and when I say a while, I mean 45 to 60 days in total from start to finish, is more because of the borrower. They don't have their insurance paperwork together. They don't have the lease together. And I'm sure you run into this a lot with your financial planning business. I mean, when it comes to collecting financial docs, a lot of business owners, I know myself included, I've had to hire out for that. But a lot of people are just not very organized. We're very creative, and again, dentists went, a lot of dentists, they went to school for damn near a decade to go learn their craft. I mean, it's a bad use of their time to be trying to play administrator and organize a bunch of documents. So, but yeah, I mean, those are the other 2 big myths that I kind of lump together and like breaking for people. It doesn't take that long to get a loan, and it really doesn't require as much paperwork as you would need. I had a friend of mine, I helped introduce him to a bank to help finance a partner buy. He was buying his dad out of his surgical device company. And he was telling me, he's like, yeah, I was surprised the paperwork. And in his case, the loan amount was over $5 million. So it was done through a bank that was going to do $5 million SBA and a portion conventional. And he told me that the application documents and everything, it was very surprising because it was less paperwork than his mortgage. He just bought a house in Vegas. And he's like, yeah, it's less paperwork than a mortgage. And they didn't They didn't ask a million questions like they do on a mortgage. Where's this? Every $5 deposit hit your bank account for the last 3 months. Where'd it come from? They're very straightforward and really streamline the process. So those are the other big myths I like lumping together.
Excellent. So, hey, you're listening to Dental Wealth Nation. We're talking with Josh Kim, and we're talking about demystifying the SBA loan process. We've talked about some of the common myths that go into getting a loan, things like, hey, I'm not going to be able to afford it, or, I've already talked to a bank and I got denied. So we went through some myths on the first part. And now, Josh, I want to dive in and I want to start just, real high level overview. What are some different ways that people can raise capital, right? What are the different avenues? And then I want to dive in and really talk about the SBA portion that you're so experienced at. So what are some of the traditional methods or even non-traditional methods that people usually look at to raise capital? What are the options available for us out there?
Yeah, I definitely think in the context of dentists, the most traditional paths for financing. I mean, it really depends on what kind of business you have, right? I mean, if you're more of a general business owner that follows Tim and his content for, maybe you've got a dental lab or you've got some other dental related business inside of hearing about us today. But I would say that for dentists, I mean, probably the most straightforward way for raising capital is just conventional financing, conventional debt. Whether that's for a building, for a practice, it doesn't really matter. Conventional debt is probably one of the more common options out there. If you've got a more innovative company, like a tech company or a software startup, venture capital and, equity crowdfunding, those are definitely ways to do it.
And when you mentioned the conventional lending, you're talking about, right, me as a dentist, I'm going to the Wells Fargo, the Bank of America, the Provides, right? These or my local business bank, right? You're talking about, just kind of the traditional conventional loans then.
Correct. Yeah, correct. And whether that's for a mortgage or just a working capital line, a credit line to just with operating capital for the practice. I'm going to talk in the more of the specific in the terms of a dental practice, not just any business, because I mean, there's a million ways you can raise money for a business, but I think for a dental practice, they're not interested in equity crowdfunding or venture capital for the most part. But I would really say for someone who's got a dental practice, really the two main ways to do it are just going to be conventional debt. Well, I'd say three. You can always get investors. If you're a newer dentist, you need some equity investors to, maybe you're trying to buy out the practice from the guy you work for, right? He's retiring. I help out on those transactions. SBA is perfect for partner buyouts or business acquisitions. Transitions of ownership. But sometimes maybe the associate dentist doesn't have all the equity. There might be a blend needed of, debt for the bulk of it, an investor for a small portion on top of the cash that they're putting in, and then another piece of financing that's I know, and I guess in practice transitions it's used a lot, but seller financing. It's really the most flexible form of it because no one's actually having to put up cash. It's easier because the guy selling the business knows the business. He's willing to underwrite it himself, really. But yeah, in terms of how capital raising would pertain to dental practices, I think conventional and SBA debt with possibly some minority outside equity. Those are really probably the main options when it comes to growing a practice or whatnot.
Okay. Now, let's dive in and talk a little bit about some of the SBA programs out there. What are the different SBA and even give us a little background of what the heck the Small Business Administration is, what do they do, and why should we even look at some of these things? Yeah,
so it's really interesting. I think that, the SBA, to give you guys some context, the SBA has been around, I think since like 1963. They were formed after World War II because the government recognized because of the war and the effect of the economy, a lot of business, had been concentrated with all these larger companies. And so the SBA recognized, the government realized that there was a big need for putting programs together to incentivize, the government to, not incentivize, but to make sure that the government was sending, business to smaller companies, because smaller companies are the ones that are innovative and creating the most jobs, right? Most of the jobs in the U.S. are created by small businesses. So they formed a different entity. I forget what it was called, but it eventually became the SBA. And so it was in there where they put the programs together where, they required a certain amount of federal contracts are set aside for small business owners, veteran business owners, women-owned businesses. They also set up all the government guaranteed loan products with 504 and 7A. But, the reason I think most people should care about it is because, like I touched on before, the way that these loans work are a significant portion of it's guaranteed by the government. So the banks are much more willing to underwrite and do these deals because most of the risk is not actually on them. And so, and obviously the SBA has a model to where, they're not losing a bunch of money on it every year. They basically just charge a small insurance premium to every loan they make. They pool those and they use those to pay out the loans that go bad. But it's really the best option for a business owner because banks, you go to a bank and let's say you want a working capital loan. They're probably not going to give it to you at 5.5% interest rate on a 10-year term, but they will through an SBA loan because there's a significant portion of it that's guaranteed by the government. Right now, because of the stimulus incentives, they're actually temporarily at 90%. So think about it. If you're a bank and you've got a dentist, he comes and he needs $1 million to grow his business, which loan would you be able to offer more attractive terms on? The one that's 90% guaranteed by the government or the one that you're underwriting and risking 100% yourself? Yeah. And that's really where the SBA comes in and is an instrumental tool for capital access. And it's interesting. The SBA is actually a profitable division of the government. Most people wouldn't know that, but the premiums they get every year off what they call guarantee fees, they roll a 3.5% to 3.75% guarantee fee into every SBA 7A loan that they roll out. The 504 program is a little bit similar, but it's about 2% of fees that they get rolled in. But they just accumulate those fees every year and use them to pay out the ones that go down. But yeah, that's some backstory on the SBA, and I think why they're so instrumental. I really think that they're one of the most important government agencies out there that people just don't think about or hear about because they're so instrumental in making capital available to small businesses across the country.
Okay. All right. And then Josh, kind of talking about what, we touched on earlier, right? Not all lenders are created the same. And there's such a difference and diversity of lenders in terms of what kind of loans they'll underwrite, the businesses that they'll work with, that actually led you to start the 7A Accelerator. So tell us a little bit about that and why specifically 7A Accelerator and what that does. What problem is that solving out there?
Yeah. So the 7A Accelerator is really the main consulting education focused entity that I have, because I identified, if a dentist came to me and said, look, hey, here's my business model, here's what I need to do, I could very quickly identify which bank, would be a suitable lender. And, it would only take me a couple hours of working with them, looking through the financials, understanding what's going on before I could say, look, here's the best loan option for you. I'm going to refer you to these 3 banks. They're going to give you proposals. We're going to take the best offer, whichever one they want to go with, and then we'll go forward and finance the business. But 7A Accelerator, I kind of break down what we do into three distinct and 3 separate parts. The first part is education, right? Because education, I think the educational barrier, like I said before, banks don't have enough time to go out there and educate borrowers very well on what options are out there and what you can really do with these things. So that's why I'm jumping on the podcast with you today. We'll have some other partnerships set up, and so that's kind of a little bit about how that works on the first facet. So educating the business owner about what options are available, what incentives are available, and we can touch on that later. There's some really good incentives available right now for the government for new businesses. If you go get an SBA loan right now, they will actually pay you to borrow money. Sounds kind of crazy, but that's one of the incentives available. So education piece is first. The second piece of what we do is, and if you're listening to the podcast, we'll put some information on the back end for you. But if you need to raise some capital, you need some help navigating the whole SBA loan process, you want someone to help kind of work with you, that's kind of where the consulting component comes in. So, we'll have a call with you. We'll ask a couple of pre-qualifying questions. What was your revenue? What are you looking to do? What are your goals with this? And then, we'll kind of be able to tell you on the phone there, like, look, here's what's reasonable. Here's what we can help you with. And then, from there, we can engage with you and then go set you up with pulling all the financial documents together. Maybe it's helping draft the business plan, draft the pro forma financials. And then, the other and really the most important piece of what we do, obviously, is we connect that business owner who is prepared and is ready to go actually raise the money. We connect them with several suitable lenders who are going to give them competitive offers.
All right. I want to pause there real quick on that consulting piece, because I think you mentioned something really important that we maybe didn't hit on is, right, when applying for these loans, right, you mentioned things like business plans or, really being able to approach the lender in a prepared manner, right? Because you don't necessarily just need a set of financials. Sometimes you require some other documents too.
Yeah. And usually it's just they're going to ask for the last 3 years of your business's financials. They're going to want a very high level breakdown of what the capital is going for, how much of it's going to real estate, how much of it's going to, a partner buyout, a practice acquisition, working capital growth, debt refinance, whatever it might be. And, usually a lot of people, they really overcomplicate the business plan. The nice thing about working with good SBA lenders is all their underwriters, they understand the small business owner. They're not looking at the financials like they would a 10K on from a publicly traded stock, a 10K, a 10Q, one of those reports that I'm sure you're very savvy at reading because that's what you specialize in. They understand, sellers' discretionary earnings. They understand business owners who run certain expenses through the business to reduce their tax liability, their vacations, their meals out, their personal car. They understand all these things. And so when you put a business plan together for an SBA lender, you just have to have it be authentic, like coming from you. Like, look, here's my business. Here's what I do. Here's our monthly sales. Here's the key people. Just really break it down in, a very simple nuts and bolts way for them and say, look, here's what we need the capital for. Here's how it's going to, be implemented. And, so a lot of times that's kind of where we help people is just taking what's already in their head about the business and just spitting it out on paper in a format that the bank will understand. So
yeah, right. And I bring that up because I think that's such a valuable thing in and of itself. Because I'm married to a dentist. I always like to joke, dentists are really good with numbers. As long as it's from tooth 1 to tooth 32, 1 through 32, they've got those 32 numbers nailed. Anything outside of that, it gets a little fuzzy for them. And you may ask the doctor, well, what do you want the capital for? And their response is, oh, I just want to buy a practice. And that's not necessarily enough for a business plan, but you working with them, like you said, you can help pull out what's already there and put it in a format that the SBA lender will recognize, see, and help them communicate clearly.
And we work with business owners. We give them a nice, 4 or 5 page template. It's got like 20 questions in it. And it's got really all the questions that the bank wants answered in a business plan. So instead of drafting some free-form 10-paragraph business plan narrative, it's just like, look, here's a 4-page PDF. Just fill out all 20 of the questions. Just a couple sentences on each topic, and that's usually enough information because the bank doesn't need a business plan. They just need to understand the business. They need to understand it and make sure it's it's a good request for them.
Yeah. Well. Right. Okay. So, but at SA, accelerator or 7A accelerator, right? You're really once again helping navigate this process because, right, I certainly could start picking up the phone, calling a whole bunch of banks, but I don't know the right ones to talk to. And so it sounds like kind of the better use of time is to talk to you first and say, hey, is this even feasible? What does this look like? And then turn you loose so I can keep working in my practice and doing what I'm good at.
Yeah, and that's really the value. That's really the biggest value that I bring for people because I run into people. Maybe they're acquisition entrepreneurs, right? They work on Wall Street right now, and they want to go out and just buy a small business to run it themselves. And they're like, hey, I've talked to 40 banks. I have a good business that I found. The owner will sell it to me for this much. The numbers make sense. The cash flow makes sense. He just doesn't know where to go. And I'm like, look, if you send me the deal, I can tell you in 5 minutes. I'll give you a list of 10 banks that will do it because the main value that I'm bringing for a business owner is I know the credit boxes of all these banks. I know what banks will do what. Like, I'll tell you, like, hey, I've got a transportation business I want to buy. Okay, great. Is it a FedEx? Is it an Amazon? Because like some of the banks that like doing transportation businesses don't like doing FedEx, which don't like, so there's all these like little nuances that I have very detailed notes on, and I know who does what. I mean, some of the biggest SBA lenders that I work with, they're more big on practice acquisitions versus, build out construction startups for new offices, right? So it depends on what their needs are. But, that's the biggest value that I say to people. I said, look, I can save you 4 months of running around bashing your head against a wall, talking to banks and getting no's because I understand what you're trying to do. And I'm going to get you set up with a couple of vendors that will be accommodating to that right off the bat. And that's really the biggest time saver and value that I bring to people is I know who's going to do what. And I'm going to make sure that the dentist doesn't waste their time, going to Bank of America and Chase only for them at the last minute for them to ask for 30% down on the building. So
yeah, because I mean, I just get on Google and I type in SBA lenders and all of a sudden I am overwhelmed and I don't know where to turn or even where to start this process. And so for a doctor who's looking to raise capital or maybe refinance some debt, are these programs good for refinancing debt also?
Yeah. So I'm actually working with I'm working with a practice owner right now. So he's got 2 locations and he's got some conventional debt from bank for one of his practices. He bought the other practice. And so basically he just paid, 40% down, the seller financed the rest. And the benefit we're going to have for that is the terms are shorter from the conventional financing and the seller note than what we could get done through SBA 7A. So we did the math, and I showed him. I said, look, right now you're paying $8,500 a month on this seller note, right? Because it's on a very short, I think it was like 3 or 4 year schedule. We can refinance this into an SBA loan, which is going to be 10 years, and your monthly payment's going to be below $4,000. So that's saving him, from an interest rate perspective, it's basically a wash. I think the interest rate's going to be about the same, but it's really more about the cash flow, right? He has now $4,500 a month more to keep in his pocket because he restructured, and that's just off one thing. I mean, I don't have the numbers in front of me out right now, but the money that he's going to be able to save on interest and turn, a longer term on the working capital for his other, for his other location is a couple $1,000s a month as well. So, all said and done, it's like, look, you lump this all together, you finance it out, whether you have, equipment financing that's on higher interest rate terms, shorter term, credit cards, working capital. I mean, you name it, SBA is great for refinancing stuff because they're going to put it into it. 7A loan it's a 10-year term, and the maximum interest rate's like 6%. So
okay, fantastic.
It's going to be better than any conventional financing you'll look at or get.
So what's the best way for a doctor to get started and have a conversation and see if this is even a fit? How can we get in touch with you, Josh?
Yeah, you can definitely reach out to me. I'm sure Tim will put a link in the description here below. We'll put it here after the podcast. But my website is 7accelerator.com. Our company name is 7A Accelerator, but we have 1A in the URL to simplify things. But yeah, you can reach out to me on LinkedIn. You can find me on there. 7A Accelerator is one of my kind of 3 businesses that I have right now, kind of tied to all this SBA stuff. I've got another software business that we're putting together that really streamlines the application process that hopefully you'll be able to benefit from if you come to us and need help. But yeah, 7 Accelerator is the best way to reach me. We'll definitely put a link below in the description. Tim and I have been talking about I'll probably be coming back on and helping the community here on a more regular basis. So maybe I might be doing a webinar next month for you guys. If you got any other questions, you can definitely ask me there. But yeah, 7accelerator.com is our website. If you want to reach out to me directly by email, it's just josh@7accelerator. And whether you want to book a call, just want to reach out to me directly, ask some questions. Maybe you're in the middle of a capital raise right now. Last podcast I went on, we got an attorney. He's like, hey, I'm actually under contract to go buy a building. It's going to be done in 3 months, and I haven't had time to go find a bank. I'm like, well, that's kind of a problem because you put up 10% already to buy it, and you don't have the rest figured out. So we're helping him right now. But wherever you are in the capital raising process, whether it's something you're looking at in the next 2 months, 3 months, 6 months, if you just want to ask questions about what you can do and what you can't do, feel free to reach out. I'm more than happy to answer whatever questions you can, and hopefully be of assistance when it comes to actually raising that money when you need to. So
excellent. Well, I'll tell you, I think one of my big takeaways today in speaking with you is just that, idea that not all banks are the same, that, when you're looking to raise capital, it makes sense to look at your options, know what's out there. If you've been told no, keep going, because there's probably a way to get these things done.
Yeah. It's really, you would be surprised at what lenders can get done with SBA financing. I mean, I have banks. I mean, when I told the other dentist that I'm working with that I had 4 banks off the top of my head who would have 100% financed the building for him with $0 out of pocket, he was shocked. He's like, wow, really? And I'm like, yeah, there are banks, for dentists, they will take an SBA 7A loan. Not a lot of banks do it. Yeah, but I know which ones will do it. For the right situations, if it's a rent replacement deal, they'll 100% finance the building. So I'm like, look, you would have been able to take advantage of the guarantee fee waiver. And I mentioned it earlier, but I guess we'll touch on it as we finish up here. If you get an SBA loan right now between now and October 1st, if you get one before October 1st, you're going to be able to save a ton of money. The government normally includes the guarantee fee in these loans, but because of COVID and some of the stimulus efforts that they put in place, they're actually waiving that. So that's 3.5% to almost 4% off the top. You can immediately save by getting your loan now before October 1st. And they're also going to pay the first 3 to 6 months of the loan for you. So on a conventional 10-year term loan, roughly speaking, if you get a $500,000 loan, the incentives are worth $50,000, 10% of the loan value. It's a lot. So, but just something to think about. But yeah, that's a little bit about what's available right now. So
okay, very exciting. Well, any closing thoughts for us before we sign off here, Josh?
Not really. I mean, if you guys have any questions for SBA stuff at all, just feel free to reach out. You know how to reach me. You got our website. We'll put a link in the description below. But hopefully, I'll be I'll be seen on a web panel sometime more frequently with Tim here. We've been talking. There's a lot of overlap, a lot of need for this. But regardless of if you've got a small practice, you got one location, you got 5 locations, you got 6 locations, and you want to explore what options are available for raising capital, feel free to reach out. Yeah, I think a lot of people would be surprised at what you can really get done with this. With these types of programs with the right lenders.
Yeah. Fantastic. Well, hey, I certainly know that I have a much better understanding of some of the different loan options that are out there, how to raise capital. I certainly feel more informed. And I'm excited for our audience, for you listening. And the next time you need capital, hopefully it's just a little bit easier on you. And you're so glad you tuned in. Don't just listen to these things. Get out there and take action. And if you do that, you're going to be able to build that amazing life of significance for your dental practice, for the people you love, causes you care about, and keep changing the world for the better. Josh, thank you for being such an amazing guest and sharing and educating so generously. I really appreciate that.
Yeah, no worries. Okay, well, good talking with you. Good to be with you, and we'll be in touch.
All right, we'll see you all again on Dental Wealth Nation.
You've been listening to Dental Wealth Nation. We hope you've gotten some useful and practical information from the show. Join us next time as we pull back the curtain to reveal the often hidden advice and strategies used by today's most successful individuals and families, and help maximize your net worth so you can take even better care of the people you love. Till next time, make sure to hit the website at dentalwealthnation.com.